I think everyone saw the limitations of the layer 1 technologies, so there was almost like an arms race to scale the L1s via L2s.
Yeah. Following the FTX downfall and the likes and things like that, we saw sort of like the SEC in the US led by Gary Gensler. He really went after the crypto, and I don't know if he went about it in the right way. Because he sort of had a point to prove after that FTX thing, he went after the likes of Coinbase, Binance. G'day guys, welcome back to another episode of Tapping Into Crypto. Got a bit of a different episode today from our regular crypto catch-up where Pav and I, break down the market, what's moving, what's not moving, what's happening next. This one's probably more of an educational piece, but make no mistake, we're not going back to basics because we did cover that when we initially launched the podcast. So if you want to listen to that, we'll chuck it in the show notes. This one's more of a piece around, covering the foundations of crypto, what has changed in the last 18 to 24 months, We've seen, the market ripped to new all-time highs, Bitcoin's going crazy, XRP's going crazy. So a lot of, the retail market is getting back into crypto and they want to understand what to do next, right? I know a lot of my family and friends are like asking, should I buy this? Should I sell this? Should I, So we're going to try and break down what has changed in that period and also what to look forward to next with a particular focus around sectors in crypto. Like we always talk about narratives, how they move, why they move. We're going to break down the altcoin market into like different sectors and we're each going to touch on, our picks in each of those sectors from an investment standpoint. But without further ado, I'll introduce, my legendary co-host. Some of you love him, some of you don't. His name is Pav Hundal. Pav, how are you doing today?
Mate, legendary. That's the kind of language we use when we introduce you.
Well, sitting in this couch, I feel pretty legendary.
Yeah, you feel pretty special, right? It's a new studio for those of us just listening in. Come check us out on YouTube. But it's pretty slick.
Yeah, mate. Well, let's get straight into it. So we're going to touch on first what's changed in the last 18 months. I think the first thing to touch on, because it kind of happened in that initial period of those 18 months, is sort of those bad actors getting flushed out, right? We saw, the huge crash in crypto that followed on from, the FTX
debacle.
Fallout, and, Sam Bankman-Fried, famously the CEO of FTX, he got thrown in jail. He won't ever see the outside of a jail cell.
No, but there is a silver lining to some degree. All the customers and creditors that were sort of mixed up in that hogwash, they will be made whole. I believe in 2025 there's a payout starting to roll out. It's obviously not what people would have wanted when they've been positions in November 2022. Obviously, if they had that same asset now, be worth a lot more. But look, you got to take it for what it is, right? Sometimes, and just seeing some retribution for those people caught up in that scandal, I guess it's a bit of a positive takeaway.
Yeah, absolutely. And the hope is that most bad actors are washed out. I think there will always be that aspect of people trying to take advantage of other people through
Absolutely.
crypto.
Yeah.
That's going to be the case, for the near future for sure. But in terms of those large scale sort of scams and fraud, like, we've seen SBF go to jail. We've seen like the Celsius CEO, he's pled guilty to fraud, could be facing jail time. And so hopefully that sort of, set the bar and taught some of those guys a bit of a lesson. But, that's a bit of a negative to start off on, or, whichever way you want to look at it, they got thrown in jail. So
there's lots of positives, but so we got to start with something to bring it down.
But Bitcoin's been the big one this year. 2024 has been a huge year for Bitcoin. So we saw, probably the biggest news of the year was the
ETFs.
spot ETFs getting approved in the
time.
US, which basically provide an avenue for institutions to basically just, get into Bitcoin, because before it was like exchanges and some didn't want to do that or go via that route.
Well, that's right. If you look at the bylaws of a lot of investment firms, they don't have the capacity to actually invest in a lot of these products because of the way they're custodied and other complexities too. So, having Bitcoin available through something like a stock traded exchange, like it's changed the landscape for us completely, right? And we're seeing that Bitcoin now, soaring past 100K yesterday, big six figures finally locked in. It's a huge moment.
Awesome to see. And don't forget, we also had the halving this year, which is people seem to forget that because of all the other major news we've had. But the halving, I think it was the fourth halving in Bitcoin's history, basically means the Bitcoin, the new supply of Bitcoin entering the market is halved, which, from an economics standpoint, you look at, you want high demand and low supply, and that drives prices higher. And obviously that new supply entering the market is reduced. So that's a good thing for the economics. Often we see a bull market follow a halving event, and we're seeing that now. But obviously there's other contributing factors as well, like the ETFs Also, Donald Trump and the US election. Talk to me about that, Pav.
Well, it was quite an interesting redemption mark from Bitcoin and crypto in general, right? Like, it's always been the talk of the town of what countries ban Bitcoin or who's sort of scathing it in the media. Peter Schiff's always had something great to say about, or never anything great to say about Bitcoin. But this was an interesting one, right? Like, we saw a lot of the presidential candidates, even some of the independents, talking about how crypto was, a key part of their campaign. I don't know. I didn't expect that. Did you?
No, but it was massive, right? Like, even Kamala Harris knew that she needed to, because Trump had such a strong stance on Bitcoin and crypto. Kamala Harris even came out and said, this will be part of my campaign. She didn't really do too much, but in the end, she didn't win. So Trump's big promise was that, if he becomes president, he'll build a strategic reserve of Bitcoin, which means the US government will buy Bitcoin for its own reserves to pay off its national debt, which is, if true, that could be the biggest, piece of bullish news we've had in the last decade. Totally. That is incredible.
Especially when you think about what sort of knock-on effect that will have in other jurisdictions, other countries, other sovereign nations. This could be something quite big, right?
I think there's another country that just announced that they're going to build a Bitcoin reserve as well, but I forget what it is. Anyway, I assume that the US won't be the only country to do it.
No, I don't think so.
Cool. And so that's Bitcoin. But then there's also, the altcoins and the asset categories, right? So
bit of an evolution, right?
Bit of an evolution. So we obviously had altcoins in the last cycle and even the cycle before that, but they have sort of the way that the altcoin direction is going has changed a lot. So last cycle we saw a lot of layer ones do well, Ethereum, Solana, Cardano,
Phantom,
Avalanche, all those.
Yeah.
That is still somewhat the case, but we've seen new sectors form, like particularly with AI. We've seen the meme coin sector go ballistic. Like, there's just a million meme coins out on the market, which we'll touch on later. What else?
Yeah, I think just to branch off what you started with, I think everyone saw the limitations of the layer 1 technologies. So there was almost like an arms race to scale the L1s via L2s, so the layer 2 technologies. And then even the newer generation L1s that we have been seeing, so let's say like Sei and Sui and Celestia, we took a modular blockchains, which, jury's out at if they're good or bad technology long term. But even just changing their approach to, I guess, how consensus is reached on a lot of these protocols, there was like this next like speed race, like who could do the fastest transactions with the greatest capacity, right? And all I remember, I guess, of the early makings of the bull market that we did see was a lot of those assets just rise to just the skies. They just went crazy. So cooled down a little bit now, but obviously Sui's been a pretty big standout. I know, Ted, that's been doing quite well for you as well, but it has been interesting that there's been a bit of, while it's not the same, it's definitely rhyming. Like we're talking about what we saw last cycle. So it's almost a market speculating, well, where are people going to be doing business next? And Coinbase launching base chain, like we can't not talk about that.
Yeah, that's pretty major.
That was pretty big, right? So
yeah, I mean, we saw the inception of DeFi as well last cycle. That's evolved, which we'll touch on in a sec. But yeah, it's been massive for those. But we're going to break that down later on in the show and really touch on like what coins we're looking at in each of those sectors. Now, the last thing to touch on is probably a huge piece as well is regulation, right?
Yeah.
Following the FTX downfall and the likes and things like that, we saw sort of like the SEC in the US led by Gary Gensler, who was put in by the Biden administration. Like he really went after the crypto scene. Like, and I don't know if he went about it in the right way because he sort of had a point to prove after that FTX thing. He went after the likes of Coinbase, Binance,
even Ethereum and a whole bunch of those projects we just mentioned, trying to dub them as securities, handing out. Well, I think when we were doing the podcast, obviously, I think there was a good 4-month period where every week we had something about someone getting a Wells notice or.
Yeah, it was ridiculous. It was countless lawsuits and it hasn't turned out too well for them. Like I know Binance US got in a little bit of trouble with the Department of Justice. So that was shut down, but Binance obviously still exists outside the US.
Yep.
Coinbase seemed to be doing the right thing. And so I don't know where the lawsuit is at currently, but from the updates, it seems like they're in a pretty decent position.
Yeah.
But we might need to touch on that. We might need to look into that a bit further.
No, I think so. But Yeah, it's a good shout. I think.
What about Europe?
The biggest takeaway for me, like I do want to lean more on the positive, I think, in this angle, because I feel like the one question we were all asking ourselves last cycle is crypto actually ever going to get regulated, right? Or is this just some sort of political farce that everyone's always just going to use to grab some attention time to time? And what we've seen in Europe is probably the most progressive thing to date, right? We've seen the MiCA bill in Europe basically classify and legislate stablecoins, which they've dubbed as eCash. So there is now legally sort of legislated stablecoins operating within European exchanges. It has resulted in some other stablecoins being delisted in those countries. But to me, that's like probably one of the most bullish things I've seen fundamentally for the industry. And we would talk about like, just someone being first and then the ripple wave of momentum that could cause. I don't think there's a world where in the next 2-3 years we're not seeing other things be classified and regulated. I think it's a very positive sign.
Yeah, and even on our shores in Australia, like they're not moving as fast as say Europe, but they are looking to regulate the Aussie crypto space. I think so far they've kind of looked at the exchanges, but they're starting to move towards that token mapping piece where are they considering stable coins a financial product? Like they're asking those questions from people in the industry. And so we might get those answers sometime within the next 12 to 24 months.
You hope so. Yeah. And I don't know, you were talking about it before in the office, even just the recent appointment of the new Gary Gensler's replacement in SEC that we just talked about, being pro-crypto.
Yeah, very bullish, very bullish. I'm actually going to touch on him later when we look into the real-world asset space.
Yeah, so that's exciting.
But I think that's probably it for the major updates in the last 12 to 24 months. Obviously, there's been so much happening.
There's things outside the crypto space which have invariably impacted us, like the local regional bank outage in the US as well. That was kind of in the last couple of years. So just again showing that the traditional system isn't not without its sort of flaws as well. So
absolutely. Okay, so this is the section where we're going to break down, sort of those key sectors within altcoins. So first of all, it's important to touch on what we call the blue chips. Now, blue chip is a poker term that sort of infiltrated the stock market, but I guess now we've kind of brought it to crypto. I'm not sure if it's like an official term yet, but we're going to use it anyway.
I didn't know that. Just learned that.
There you go. What, the poker part?
Well, yeah, that is from poker. Is it really? Or you just make that up?
No, that is. I looked it up.
Well
quick Google will tell you that.
Director Lee is looking dubious. He doesn't believe you, Ted.
Yeah, anyway. We don't like Lee. So what we're going to put in the blue chip category is obviously Bitcoin being the first ever cryptocurrency and also, still the largest crypto.
Yeah.
We're also going to chuck Ethereum in there. Ethereum hasn't been doing what a lot of people expected or wanted it to do this cycle, but still it's the second largest crypto. It was the first ever smart contracts platform. It still has the highest total value locked on its network by a long way. So that undoubtedly is going to be in that blue chip category. And then I've put in Solana because I know it's not, I think XRP is third on that market cap list, but I've put in Solana because it has captured a lot of the attention in the last sort of, that 18-month period, particularly because it's kind of improved on the issues that Ethereum experiences. Ethereum's fees are very high. It's often quite slow to transfer on the network. So Solana's come in with this vibrant ecosystem. It's cheaper, it's quicker, and
they're generating more fees. Even though they're cheaper, they're generating more revenue than Ethereum currently.
Exactly. So projects are moving over there. A lot of the meme coin activity is happening on Solana. It just from if you look at it from a fundamental standpoint alone, Solana looks like a more attractive or if you're a user and you say, I'm either going to use this, which is been around for a bit longer and might be a touch more secure, but it's slow and it's a bad user experience, or you look at this new project which is a lot better in that user experience aspect, like you're going to say Solana's the better project, right?
Totally agree.
But regardless, we're putting it in that blue chip sort of category. So next category, DeFi. Pav, talk to me about DeFi.
DeFi. So, in a summary, a lot of people might have heard the buzzword DeFi, decentralized finance. Quite simply, it's creating a peer-to-peer market for things like lending and borrowing. So, traditionally you go to your bank, say, I want to borrow X amount of dollars. They'd give it to you, right? So what DeFi has enabled is people are able to operate in that same sort of fashion, create contracts with each other where they'll agree upon a rate and be able to, basically do exactly that, just lend. I think it's been obviously probably looking at the last bull run, one of the most attractive, captivating things that we saw in terms of real use cases for Bitcoin. There really hadn't been anything substantially material, like, oh, I can do this with crypto now, right? Now you've got a whole ecosystem that's sort of bred out of that sort of lending space. So, there's the good and the bad. Like you had, obviously then companies like Celsius sort of spin up, maybe not doing things the right way from a governance perspective. But you've still seen, I think category assets like Aave survive, 2 bear markets and successfully not have any hacks that have been sort of deteriorating their product in any meaningful way. So, for me, when I think about DeFi, it is about having trust in the product and the protocol and what it offers, because as we've sort of seen last cycle as well, there's always been a more attractive product with a more attractive rate. They seem like I can't get this rate anywhere else, so I'm going to unfortunately bring up Anchor Protocol as well in this conversation too, because that was an instance of like where people were earning 20% just on stablecoins. But then it was pegged to a very unsecure collateral, which was the Luna token price, which went into that death spiral, right? So for me, like when I think about decentralized finance, it's about understanding, the underlying mechanic of how it works to some degree. I think like we're obviously, on the podcast, we like to do our research. We like to share our research. I think Aave is one that stood the test of time by not allowing people to get over collateralized and have to use something quite stable and not their own token, which could be worth anything. I think it's a very exciting prospect of how that evolves moving into 2025 as well. I am sort of the opinion that we have seen the rise of chains like Solana. We're going to see some more innovative products potentially as well, just from a user experience perspective. So like one real quick example I'd give is with our traditional banking system, you'd put money in a bank, you'd get a statement at the end of the month that told you how much interest you got, right? DeFi enables you to basically have that same experience, but you basically get that yield paid out daily, right? So it allows you as a user to have more options, be more flexible, as well as in this case, probably choose your sort of risk profile too. So you can go higher risk for a higher reward or lower risk for a more modest return, right? So for me, it's really empowering, I think, for people more than what they know. And I'm excited for the user experience to just be polished up that little bit better, make it more understandable, and just for that trust element to just sort of breed a little bit further. I think that's a big part of DeFi moving forward for me.
Yeah, I like what you said there about like it's a similar sort of user experience to what you'd say with the bank. You're getting a yield daily as opposed to monthly. Like if you're having that conversation with your parents or your family at Christmas and they are asking about DeFi, I think an easy way to put it is literally you're getting all the aspects of finance on the blockchain. So you're not relying on the banks. I know a lot of people like trust in banks over the years has sort of diminished. This is a trustless system. It uses smart contracts to automate these processes of whether you're lending, borrowing, or you're trading. You'd invest through the financial system. So it's got all those things that you can do through the traditional finance system, but it just takes it on chain and removes that central authority, i.e. in this case being the bank.
Yeah, and it lets you, honestly, you could be the bank in these sort of circumstances. It is peer-to-peer, so as much as you could be the borrower, you can also be the lender. So you can actually be collecting a yield on assets that you've just got idle. So
how good's that?
How good's that?
All right, well, let's move on. The next one is stablecoins. So stablecoins is, it's not as exciting because you don't invest in a stablecoin to make money off it, right? But stablecoins are a crucial element of the crypto ecosystem, right? So what are the main purposes of a stablecoin? It's often, for sending value overseas. So a stablecoin is like a cryptocurrency or a digital asset that is pegged to a fiat currency. In the most popular ones are pegged to the US dollar. So USDT, USDC. So often people in, less fortunate countries with say, poor economic conditions will actually be able to access stablecoins to hold their money in like a USD or a USD stablecoin as opposed to their own volatile fiat currency.
Yeah, super relevant when we've seen inflation rates over 150% in some countries over the last year. I think Venezuela and Argentina come to mind there. So, I think stablecoins for me, it's almost like considered as a way to still keep your assets in the blockchain and crypto space without having to go back to your bank. Because prior to, I guess, stablecoins really being a huge liquid market, cashing out can be quite a cumbersome process. So it sort of enables you to sort of be able to take a less risky position, relatively speaking, than always having to be in a cryptocurrency that's volatile, like you mentioned.
Yeah, and most exchanges you'll need to trade through stablecoins. Like unlike SwiftX, where you can onboard AUD and trade, AUD to Bitcoin, right? A lot of exchanges you actually can't onboard your fiat. You'll have to send it there from an exchange like SwiftX. So you'll need to trade through a USDT pairing or a USDC pairing. So often people keep their money on exchanges and stablecoins until it's time to trade.
And I think stablecoins as well, just to shout it out as an industry, like I think the world is sort of gravitating to the fact that they understand that this is going to be a medium for exchange and a real opportunity when we're talking about moving trillions and trillions of dollars within seconds. I think there was a recent report, the A16Z report, that looked at the cost of a traditional wire transfer. It's like $44 US. A stablecoin transfer can be less than a cent. So, I mean, these are the numbers that, it's not lost upon people, I feel. We've seen PayPal enter in the last year or so as well into the stablecoin market. PYUSD, I think, is their ticker. So, yeah, I think it's just a space that's just going to probably grow faster than what people expect.
So that leads on to our next one, which is tokenization of real world assets. So I guess like a stablecoin isn't a real world asset getting tokenized, but this sector goes into that a lot more. So we've kind of seen the inception, or especially with the term real world assets, right? We've seen sort of the inception in the last sort of 18 months. So what we're talking about here is basically tokenizing an asset such as a stock or a bond or even real estate on the blockchain, right? Which means it's more liquid, so it can be traded more easily, and it's also being fractionalized. So, buying a house is difficult because houses cost millions of dollars sometimes.
You got to buy one house.
Yeah, exactly. Whereas, you could buy, 1/100th of a house, which is a lot more accessible, right?
Yep.
And so the whole idea is we tokenize all of these financial instruments, financial products, and even just assets that we use on a day-to-day basis, and being able to sort of get more out of them. So Larry Fink, who's the CEO of BlackRock, he's basically said that the tokenization space is going to be huge. Like he wants to see every stock tokenized in the future, for those reasons I said before. My pick for and I assume this is your pick as well, Pav.
Yeah. For I think I know what you're going to say.
The RWA space is Ondo. And Ondo is absolutely killing it, particularly after, as you said before, Trump appointed Paul Atkins, or is looking to appoint Paul Atkins as his new SEC chairman. So why that's important is Paul Atkins is a member of the Securitize Advisory Board, and Securitize is like a tokenized fund, right? But they also partner with Ondo. And so Ondo has all of a sudden these links to the SEC chairman, to BlackRock, because they partnered with BlackRock as well. And so they're in a really good position. And they've also got one of the biggest tokenized funds available. I think it's second to BlackRock's own tokenized fund, which is Biddle, whatever.
Biddle, yeah.
So, yeah, that space is going to be huge. And I think it's going to go outside of just the crypto space as well. So, like, we've already seen BlackRock launch a tokenized fund, which, you can't really access a token through that fund, but it is, it's just a testament to, the blockchain technology that underpins it, right?
Yeah. And it'll get to a space, I think a time and space where people will be, investing in companies or products that offer these tokenized assets, but they don't know that that's what they're accessing, if that makes any sense. There'll be companies that specialize in finding opportunities through real world assets as a vehicle or medium for exchange, but then they'll pass on that as a product of their own, I feel like that's sort of coming as well. So
it's going to be huge.
Yeah, it's good.
What have we got next? We've got AI and gaming. So AI's, we've debated about it for a long time.
Yeah.
Like, where is the intersection with crypto? Like, does it even need to exist? And I think in recent times the intersection has been, or like sort of the use case has been clear. NVIDIA and OpenAI is the people behind ChatGPT. They basically have a monopoly on the AI space. NVIDIA creates the chips. OpenAI has all the users, right? So they basically control a lot of what happens in the AI space, but sort of by putting it or decentralizing the data, it helps ensure more transparency and like ownership of that data. So I think that's good. I think the jury's still out for a project in crypto that's going to dominate the AI space. I think Render's probably one of the leading ones. I know Fetch, Ocean, and what was the other one? They combined to make
the other one escapes me.
Yeah, I forget what it is, but they've combined to make like this, complete AI crypto protocol, which will be interesting to see. But yeah, what are your thoughts on that one, Pav?
Same thing on I think crypto is a great space in the sense of like it really is a hub of innovation, and we've seen AI outside of the crypto lens absolutely blow up in the last 12 months. It's crazy, right? It's kind of being seen to as the next real generational productivity uplift, similar to like the industrial age. You can sort of like it to in terms of productivity. So I think there's enough reason for people to just at least be happy to speculate as to what could be a use case. And I think what we're both seeing, and we've been talking about this, I think, for a good 12 months too, while we can't pinpoint exactly what is going to be sort of tick of approval of like, hey, this is a blockchain product, it's AI, it needs to exist. We can still sort of hypothecate that the infrastructure is something that people are going to need regardless, right? So the same way you don't know what car's going to go the fastest, it's all going to need a road. So the advent, I think, of a lot of those infrastructure assets that you mentioned, Render, Fetch, I think that is kind of the space that we're both probably looking at closely. Just to reiterate your point, I think for me, it's more about the infrastructure and the supporting foundation of what's around AI, and then just looking to see what opportunities might arise in the next 12 months.
I think as well, just having some exposure through your crypto, if you're looking for a diversified portfolio in crypto, like having some exposure to the AI sector is probably a decent idea because, as you said, AI blew up in the last 12 months, so did all the AI coins on the back of that, right?
Correct.
We're likely to see AI advancements just in general in the next 12 months, so it wouldn't be a bad idea to have some exposure to an AI token, but obviously do your own research there. We'll touch on gaming quickly because we got to get through a lot here. But, so we're yet to see the gaming space really take off in this cycle.
Are you surprised by that at all?
Not particularly, but I think it's coming. Like I think we will have sort of that gaming narrative later down the track when a lot more of the retail market is back in, and because gaming's one of those things that, you know, I can easily understand a game because I've played them before over, say, you know, a layer 2. On Ethereum, because like I have no idea why that exists or what it exists for, right? So it's easier to sort of access from a knowledge standpoint.
Well, I think if you just approach someone and just even didn't know anything about crypto, we gave them that exact thing we said about AI, like, well, look, we're not solid on the projects, but the infrastructure is what's important. Imagine that conversation, but instead with gaming, you're just saying, oh, look, you can play this game and you get rewarded and that's worth something. You can basically earn money for just playing these games. And like, oh, that's like, it just clicks, right? Like you said, it's just a lot more tangible.
Exactly. But from a investment standpoint into the crypto gaming or the Web3 gaming sector, I personally, and I think we've talked about this a lot of times, like I personally like to look for the infrastructure plays because games will come and go. There's a reason why, you know, the first FIFA game, no one plays it anymore. Like there's been a lot of iterations since, right? And people get sick of games, you know, they want to go to the next thing that's shiny, right? So individual games is kind of a hard one to, you know, put my money into because I know like the interest and adoption will start to lead elsewhere, right?
Correct. Yeah.
But all these games need to have a blockchain to exist on, right?
Yep.
And there's some really key ones. So ones that come to mind are Immutable X, Beam, and then also Ronin. So from my point of view, Immutable X has the highest market cap. Ronin actually has a sort of like a really strong user base or active users using or playing the games on its network. So, and it has the smallest market cap out of those three. So from that standpoint alone, I'm looking at Ronin. Also, they had it last cycle with Axie Infinity. You know, they did well there. I know they had a little bit of a hack, but it seems to have been resolved from there. So I'm looking at Ronin as a little bit of exposure to gaming in my portfolio.
Yeah, I think the only thing I could add to that is Ton Network. Toncoin, very much related to Telegram. Telegram being one of the largest user bases of any app in the world. They've sort of reimagined gaming to be within their own app, created their own wallet infrastructure system, all within Telegram, like the actual app, right? Everyone can access that through the App Store currently. So for me, I just think about speculating on like, you know, if they are successful in getting that product across the line, they've probably got access to the largest user base currently. Like you could probably argue Facebook's probably as big, but to me, it's more just thinking about, well, what products out there on the market have a user base they could activate? Like that one that you mentioned, that stat with Ronin, like I think fundamentally seeing people already interacting and that active user base growing is a big fundamental key sign before I think gaming takes off too. But yeah, Ton Network, just to shout that out too, like it's just maybe something to keep an eye on.
Good pick. Now lastly, everyone's favorite, meme coins.
Oh, it's my favorite.
Yeah. It just has to be, right? So to put it simply, meme coin is a community-driven coin with often little to no value. I know some of them are starting to develop a little bit of utility and fundamentals behind it, but it's usually just started out of a funny meme, a picture of a dog, a picture of a cat, whatever it might be.
Capture of culture.
Yeah, capturing culture, you know, having, you know, a community behind it where people are, you know, making memes and laughing along and sharing it with their friends. Like it's one of those other things similar to gaming. Like it's easy to understand, right?
Yeah. Well, it's easy and it's hard, I reckon. A lot of people will say, why are you buying that?
Yeah, it's a good point, actually. Yeah, it's kind of the same thing with NFTs, hey?
Yeah. But I mean, like I've gave an opinion recently on an article where I drew the link more back to what if meme coins are simply just a beta play on volatility in crypto already. So, you know, you have crypto, which might move with, you know, 3 to 4 times the volatility of traditional markets already when you just look at something like Bitcoin. Well, meme coins move at probably, you know, 3 to 4 times more volatile than Bitcoin, right? So, you know, if you're thinking about from more of a macro lens that we're going to continue to see money, you know, sort of coming into supply, we're going to see conditions ease. There's going to be a appetite for more risk, which is usually more volatility. I think the market will inherently just shuffle still towards meme coins moving forward.
Yeah.
But that being said, there are still some meme coins that, you know, I think there is a bit of a process to it. I don't know about you. Like, I think there are the reasons why some meme coins have a bit more staying power than others. We got to touch on it first before I continue my point, but like pumped up fun, right? Like seeing the advent of that in the last 12 months, people might not know about that if you want to.
Yeah, Pumped Up Fun is basically a platform on the Solana network where people can create their own meme coins easily.
Yeah.
And it's just absolutely blown up. And then, you know, people can also buy these meme coins on the Pumped Up Fun platform. And yeah, it's been ridiculous. Like, and so the amount of meme coins have been invented out of that is just insane. And so there's this huge market and this huge competitive landscape for meme coins now, and they're all trying to capture the, you know, the sentiment and the adoption of the crypto community. And it's a lot harder than last cycle where we just had Dogecoin and Shiba Inu, right?
Yeah. It's like right now there'll be something obscure that happened like in the presidential cycle, like Peanut the Squirrel, right?
Yeah.
And then all of a sudden that's gone blown up 1,000x overnight too. So it's just so hard to keep up with.
Yeah, I don't try and find like the meme coins that are, you know, I'm not in the weeds trying to find the next meme coin that's going to do 100x because I know that is just ridiculously hard and a lot of them are scams. So you just got to be careful with that. I'm more looking at sort of, you know, the top end meme coins, you know, the biggest ones on Ethereum and the biggest ones on Solana. So obviously Dogecoin has sort of set the standard. That's on its own blockchain. But then the biggest ones on Ethereum are the Pepe, I think.
Pepe.
Solana, we're looking at Bonk and Dog with Hat and even Popcat. So all of those have had strong gains in the last year. Even Brett on the Coinbase or base layer 2. So I don't know. I think from my standpoint, like it's one of those things where I do want to have exposure to a meme coin. Am I confident in my ability to pick a meme coin? Absolutely not. But so far, you know, I got on Bonk, you know, probably, you know, almost 12 months ago, and that's had really strong gains for me. So I'm just going to hold on to that.
Yeah, and Bonk's a really good example of when you actually do start to look into some of these projects, there are some fundamentals. You know, they've created a slew of products, like they have their own trading bot, essentially, where they'll actually burn the supply. So like, we're talking about the very start of the show where Bitcoin had that sort of supply where it's shrinking over time. Some of these meme coins they're creating utility, so it actually shrinks their supply as well. So that's again like a pretty key fundamental piece as to how price can go up in future if there's less to go around. But then you look at something like Pepe, not necessarily linked to anything fundamental other than culture, right? There's not probably anyone out there that hasn't used a Pepe meme in the last year. So I think again, it's already a part of the current sort of fabric of what society's used to seeing, and easily relatable just with the fact that it's a meme. Everyone loves Pepe.
I love seeing Pepe meme.
Yeah.
Fantastic. Well, that kind of finishes off our segment on the sectors. Now, we're going to actually do a predictions episode for 2025. So we didn't go too deep into what we expect come next year. We just kind of highlighted the projects that we like in each of those sectors. So make sure to jump onto that episode when we release it. I think it'll be either around Christmas time. So we'll make sure to keep you posted on that one. But to finish off, we want to kind of give you guys some guidance of our strategy that we do, some key points to take away. So I think in this bull market, like it's important to understand that if we see a bull market like we have in the past, like there will be a fantastic amount of opportunities to, make some good gains on, right? But the hardest thing is to take profits. It's selling.
I knew that's where you're going.
Yeah, because people always struggle. They always get greedy and think, oh, well, what if it goes to this? I'll have this much more.
Yeah.
I've been
we've all been there.
Yeah, we've all been there, exactly.
Yeah.
So
yeah.
I think it's important to have an exit plan, and that exit plan might not look like, okay, at this point I'm selling all of it. It's like, as we always talk about, dollar cost averaging in and dollar cost averaging out. Take profits. Shave off 20% of a 50% pump every now and again.
Yep.
So just take profits and make sure to withdraw it to your bank account, so it's not just ready and available in your exchange, ready to be traded into the next fun thing that pops up. So that would be my key takeaway. Pav, do you have any words of wisdom for the people?
I could just speak from personal experience. I think it'd be nice to sort of go back and think about my mindset last cycle, because we were sitting a row away from each other at that stage, as the market was just uncontrollably going higher and higher. All I remember that was exactly what you just said. There was so much opportunity, but half the time I was like, I'm fully deployed. I can't possibly buy anything else, right? So a thing I've definitely changed in my approach is having predefined levels that I'm going to get out. Looking at something like the seasonality, which we cover on the podcast all the time, like general months where the markets perform well, and usually when we do see a cool off, just being a bit more pragmatic and having capital available, so when there is a dip, I can buy it. I think that's been a big piece. And then the second one is no one's going to sell the top. No one is going to purposefully call and pick and sell the top months out in advance. It's just not possible. There are things that we can look to, and again, that we talk to, like something like liquidity cycles and looking at macro factors that can influence the way prices are moving and how volatile we should expect the markets to be. But no one knows how price is going. So if you take that away, that simple fact alone, you've just got to draw a line in the sand for yourself. What's a meaningful amount of growth for your portfolio, and making sure you've got the ability to re-enter when another opportunity presents itself. Because I think that's the biggest thing, just opportunity cost from not taking profits, for me personally.
Yeah, and don't chase. Often beginners will come in and see this coin's pump 50%, and they have, they get FOMO, fear of missing out, and they chase that coin. And then that coin's often already done its dash, right?
Yep.
So just be comfortable with the coins you're already invested in and have conviction about those. And because you got to have patience in this game, right?
Yep.
It's going to be the bull market could be 12 months. And
it's exhausting.
You're looking at ridiculous gains on some days and then pullbacks on other days. So just have patience, have conviction about the coins that you're invested in. Obviously, we'll try and keep you posted on the podcast. So make sure to listen to us. But that would be my final bit of advice.
That's good. I think a few battle stories are always good.
Yeah, absolutely, mate.
Yeah.
Cool. Well, that's been a long episode, so we might wrap it up there. Thanks for listening, guys. We'll catch you on the next ep, I guess.
Yeah. We are obviously ushering out 2024. It's exciting things for 2025. So hopefully this episode's been a nice little primer. Just caught everyone up, especially if you're just coming back from last cycle. Last cycle might have been your first one. So I think we both definitely agree now's the time to sort of at least lock in and just perk your ears up a little bit as to what's happening around us right now. So
absolutely.
Good times.
All right. Thanks, guys.